Thanks for coming back to learn more about P.I.E.
This time we're going to be getting into information that inherently is a little more statistical. As you can see on the pie charts, the intent here is to give you a context on revenues so you'll have some idea of what the changes are relative to what is happening in the base case. As you can see on the pie chart, the federal government collects about $3.7 trillion in revenue each year, currently. And that number comes predominantly from individuals paying income taxes and individuals paying payroll taxes. That accounts for 2 out of every $3 that the federal government collects comes from one of those two sources. So they will be impacted, both individual income taxes and the elimination of the payroll taxes, replacing it with a federal sales tax, is the heart of what P.I.E. does. So the sales tax, which will be paid by everyone on anything they buy that is not housing, and it will be paid at a rate of 11%. It will be paid no matter whether purchase is made on the internet or whether it is made at a physical facility. No matter how it's made, 11% will be collected. That collects more money than the individual payroll tax does, in the vicinity of $300 billion more per year. And it comes from basically two sources. One is the underground or cash economy, also sometimes called the shadow economy, a number of different terms for it. But it's the people that typically make their money either legally or illegally in the form of cash. Those people do not pay any payroll tax or income tax today because they do not report their earnings or their income. Under the P.I.E. plan, those people will be paying sales tax because whenever they take the money they have earned and they go to spend it on whatever, cars, anything but housing, they will pay the 11%, and that will bring in new revenue to the federal government, around $170 billion new revenue per year. In addition, the sales tax will be collected on goods and services that are purchased by foreign visitors to this country when they buy things when they are here. And that's about another $8 billion. So we get new revenue that we can use to give the middle class the tax cut I've been talking about.
Higher income individuals would also pay more in sales taxes than they currently pay in payroll taxes, and those are being eliminated. The payroll tax is 7.65% on the first $137,700, and then only 1.45% above that level. As an example, that means $1 million earner would probably pay around $23,000 in payroll taxes, but now that would become $38,000 in sales taxes on $350,000 of non-housing purchases, which is a $15,000 or 1.5% increase as a percent of the $1 million earner. Although that's not a large increase for that even $1 million earner, when you look at all families earning over $220,000, it brings in $81 billion more in revenue and allows both increases in benefits for Social Security for under $100,000 households and for welfare recipients to make those two groups whole under P.I.E., which is critical.
The next P.I.E. video will discuss how P.I.E. significantly increases the viability of the current Social Security and Medicare Part A programs.